because people think that the objective of everybody in the stock market is to get the highest ROI, which is a disaster if this is what you're thinking. Your job is to protect your capital, same as what Warren Buffett told us. Don't lose money. That's the first rule. And the second rule, don't lose money. So protect your capital. Number two, get the best ROI. So I consider myself as a financial educator and somebody who helps people to get out of the rat race, basically.
Yeah, I love all of that. I love all of that. I've made a few notes here because I think with podcasting especially, and the fact people tend to give quite long answers covering a lot of topics, it's nice to sort of note down things and go over them individually. So I think first thing is the rich dad poor dad thing. You know, as you said, sometimes your parents aren't
Yeah.
educated in a certain space and you haven't been exposed to that. So then nowadays we have to go out into the open market and say, okay, let's learn an options, let's take an options course, whether it's buying or selling options. Let's look at an investing course, whether it's long term or in something else, so it's equities, bonds, etc. And it's down to us as an individual to listen to the right podcasts, to speak to the right people, to maybe speak to people in our friendship circle to try and understand these things, because it's all well and good reading books, but unless you can converse about how it works, your understanding is limited by that, I think, as well. So coming
Correct.
on to what you prescribed, I suppose, initially is to keep away from scalping, day trading, and essentially short-term investing on, you know, people use 5 minute marks, 15-minute trading candles,
Yeah.
etc. On the flip side, though, would you not say there are successful people who do that in terms of they can, as you said, protect their capital through stop losses, etc., where they can limit capital but also look at upside potential? Or are you more on the side of, well, actually, it's too speculative? Markets and asset prices can fluctuate so much in a very small space of time that it's very difficult for you to profit on that. But if you look at a long term options as an example, you have
So
a much larger understanding of how prices change due to supply and demand or whatever. Like oil as an example, you saw in the past when they overproduced oil, the price of oil then drops because there's a much wider supply than there is demand, for example.
let me answer two things. Number one, I myself, I don't consider myself as a long-term trader. For me, I'm a swing trader, so I go in and out between 2 weeks and 6 weeks. But the objective, the view, I'm adopting a long-term view, and that's the difference.